let's get to today's session. To lead this discussion this afternoon, it is my pleasure to introduce Kate Houghton.
Thanks so much, JP. So we'll be talking about digital identity today, where we are with digital identity today, where we want it to be, and the context of financial crime compliance for digital identity as well. So I'm just going to pop a link in your chat box. So all of the attendees, please take a look at that link. Panelists, stay focused. Do not look at the link. And we'll jump into our introductions of our delightful panelists today. So first we'll have Paul. So Paul is actually the co-founder of Inclusive Innovations and the CEO of Approve. So that is their validation and verification product coming out of Inclusive Innovations. So Approve is helping banks digitize onboarding on the African continent. In fact, Paul is doing some work in East Africa right now in Nairobi with some trips scheduled in Ethiopia and Uganda as well, he just shared with us.
Yes,
yeah, just among some of the many things you guys are doing right now. So we look forward to hearing more about that. So Paul's also worked quite a bit in banking and insurance, and he's a leader in Ghana's entrepreneur community. So we have lots to learn from him today. We'll move on to Isabella. So she's a research fellow for the think tank RUSI in their Center for Financial Crime and Security Studies. So she's also wrote for Comply Advantage, which I think this audience is well familiar with Comply. So you may have come across her genius before, some of her writings online. And she also studied intelligence and international security at King's College London. So lastly, we have Haffa, who is a country manager for the UK and Ireland at open banking platform Tink. And it looks like we're still screen sharing there, JP, there we go. So prior to Tink, Haffa has actually led Stripe's expansion into Latin America, as well as the company's banking products and partnerships in Europe. So he's got quite an international focus as well. Before that, working for Elevon and Citi in the US and Brazil. So he's frankly been in payments longer than many of us have been working, and yet still manages to look so youthful. So
less so this time, but yeah.
The mustache is really helping. So we have, quite a range of global perspectives here today, which is really important for this discussion. And we're delighted to have global attendees as well. We saw attendees registered from all over the world, frankly, which is very exciting. So we're going to start just by talking about how we got here. So we have three panelists today, none of which are financial crime practitioners. So you notice none of them hold kind of, MLRO or analyst roles, et cetera. Isabella may be kind of closest to the subject matter perhaps, and yet they're all experts on digital identity, which of course is not simply a financial crimes issue. So I'm actually going to start with Paul, and I've heard your story before, and I'm looking forward to hearing it again. So can you fill us in on how you ended up working on identity issues?
Right. Thanks, Kate, and everyone else who made time to join the panel. Well, so my background actually started when I began working in financial services. So right after high school, when I was 18 years old, I joined an insurance firm, and typically my week would go like selling to about 10, 15 clients. And I would have to present, these clients to headquarters to verify and approve them. And about half of them will be declined. And so I began really interacting with this whole issue of KYC and identity. And this has been consistent across my career. I worked in a big Pan-African financial services group called EcoBank. And that allowed me even to understand, KYC from a perspective of both retail and consumer, and really what the challenges are on the continent, right from interacting with customers out there through to, trying to figure out things in the back office. And that really, over the last 5 years of my career in financial services, it really gave me that up close interaction. I also had the opportunity to really delve down from a policy perspective, working with the Central Bank of Ghana, thinking through policy around payments and identity. And that really has exposed me to the industry. So that's just a brief about my trajectory so far as identity has been concerned so far.
So it really came out of kind of experiencing these pain points firsthand. But I imagine, there's probably other pain points you've ran into in your work. So what is it about identity that really hit home so hard that you wanted to pursue?
Well, in Africa, I think that identity, usually we do, underestimate how critical it is, because, a lot of people, for them, it is their ticket to accessing major services, right? From banking to healthcare, etc. And so, for example, if the government is doing enrollment programs like, say, the health insurance, everybody scrambles to get that, because prior to that, they don't have any form of identity, and they'll typically use that health insurance ID as their main form of accessing any kind of service. If it comes to opening a bank account, or trying to access government services, that is what they would use, right? And so, having that understanding, it is quite critical that the role that myself and many other players in the industry play is really important for us to build an infrastructure that reaches the masses. And for me, that is really something that I am really dedicated to, and I've dedicated my career, and what the team at Approve has been doing over the last 2.5, 3 years, is to really build infrastructure that reaches people, that makes them to be able to access irrespective of the channels they are using, especially in the time when we have identity going digital and governments enforcing the need for people to go digital. You don't want to marginalize people. And so this really is what we've been focused on solving.
Yeah, I think that's so interesting. You're mentioning the use of health insurance as ID. There are many countries where that would be seen as, flagrant kind of encroaching on privacy and your health information, right? So, so that's something we'll discuss a little bit later on this morning. So I think we'll kick it over to Isabella. I know you've been doing some work with ACAMS on a research project. You've also done quite a bit of work with the FATF, right, on researching how their standards and their evaluations can impact financial inclusion, or maybe not impact, right? So tell us more about how you got involved in this work, and even how you got involved in financial crime in the first place.
Gosh, yes, how I got involved in financial crime in the first place would be via a study, like you said, about in my master's on international security, and looking quite closely at terrorist financing, and then through work at RUSI, understanding the really wide and complex financial crime space. But I think my relationship with identity, as you mentioned before, I used to work for a RegTech. And of course, although it didn't provide ID and V services, we worked quite closely with a number of different providers. And I've always seen it as a really interesting space, but that interest has really been concentrated over the past year. As you mentioned, we're currently doing a 2-year research project with the Bill and Melinda Gates Foundation that assesses the impact of the FATF system. So everything from standards, guidance documents, mutual evaluations, and sees how these impact digital financial inclusion. And when you start researching things like digital financial inclusion, or financial inclusion more generally, you very quickly find that access to identity is probably the most crucial factor, after things like access to electricity and the internet, when it comes to accessing finance. So just as Paul was saying, so we've been looking at digital identity quite closely from that lens within that research project. But I think also, just over the past year during the coronavirus pandemic, we've all seen different ways in which the pandemic has highlighted that there are just so many issues with how we identify people at the moment, and how when you can't go somewhere, it becomes really difficult to access services. So because of that, we are beginning to look with ACAMS at producing a survey, which will be launched in January 2021. I'm sure I will be harassing everyone on the FFE Slack channel to fill it out, which looks specifically at the perception of digital ID and its utility in the fight against financial crime from the view of financial crime compliance expertise specialists like yourselves. And that's not just looking solely at the use of digital ID to boost efficiency in this space, but also to boost the effectiveness of financial crime controls. So really excited for that, and to see what everyone has to say. But yes, I would say, I've always had a bit of an interest in identity, but over the past year, it's really been concentrated as we've been able to look into the topic a lot more closely.
No, that's so relevant right now. What you mentioned about lack of travel, especially, not just during COVID, but people are more mobile in general. And, for example, I left America maybe 9 years ago, and I have a bank account there that I've not been able to close because I have to do it in person. And that's just really not my priority when I take a trip back to America, right? So I've had an unused bank account for 9 years that's stacking up fees. But that's a type of example of things that really, should be able to be handled online these days. So Haffa, we'll move to you. We obviously work together at Stripe, and you were managing kind of many moving parts there across many markets, but in particular, you became an open banking expert. At least in my eyes, it seemed like just overnight, all of a sudden. So what first drew your interest to open banking?
I would say first, in a world where data is so foundational to our economy and to everything that around us, think about especially this year, right? I think that the data has been permeated all these services and it's been critical in granting access, not granting access. I would argue the most consequential piece of legislation we passed over the last decade was Gdpr, the General Data Protection Regulation, and Gdpr sets out a number of rights to people in Europe, and thankfully this has been actually reverberated and replicated in many countries, where you have right to data protection, right to access your own data, withdraw the consent, the right to be forgotten, and yet one of those rights is the right for data portability. So it's the right for you to take your data wherever it is held and port that over. And actually very little has been done on that right until open banking. So open banking is what attracted me is this foundational change where we get one of the most consequential types of data, which is people and business financial data, and grant them these rights that they already have, but make that a reality. Deliver a genuine data mobility solution. So that's what attracted me. I think this is not only GDPR was one of the most consequential things that have from a legal perspective. I generally believe that open banking is like payments was in the late 60s, early 70s. I think it's a foundation for much greater things, and we're very, very excited about the outlook for this part of the I'll say data portability space, but also about data portability in general.
No, that makes sense. And you mentioned essentially having some agency over your own identity, right? And they do mention that having agency helps to prevent burnout. So it's sort of an approach to avoiding burnout with one's own identity, you might say. So, let's just talk about what digital identity is, because I do think we talk about it quite a bit, to the point that I think it almost becomes kind of muddled or confused as to, if we keep chatting about it, is it because we don't understand it potentially? So Haffa, we'll just stay with you. Do you want to just quickly kind of define what you think it is?
Sure. For us, digital identity is any personal data that is online or can be made online and can be traced back to the real you. For us in open banking, for example, when you grant consent to sharing your full name and your bank credentials, you're effectively exercising agency over your digital identity, and that's of course one of the cool services that this technology provides. But I think more general, we look at it as any personal data that's again online or can be made online and traced back to you.
Absolutely. And Isabella?
Yes, I'm going to be a bit boring and just echo the FATF definition, but also because I just think it's quite a good definition. It's quite useful, especially for financial crime, which is the use of electronic means to assert and prove a person's official identity online, which I think the emphasis on official sort of echoes what Rafa was saying. I think we probably have more digital IDs than we think, but it's really, I think what we're talking today about is the official identity of someone.
Absolutely. And Paul, we'll round out with you.
Yeah, I would expand that scope, because I've seen there's the trend to define digital identity only from an online perspective. But in Africa, we actually do have both an offline and online perspective, where you actually being able to attribute both behavioral and non-behavioral IDs. What I mean by that is that, so when the government issues to you, an ID document, it's usually non-behavioral. Nothing really happens after that. You have your national ID, it identifies you as Rafa, and that is it. Now, behavioral ID now moves to the scope of how all the other things that you do when you make a purchase, at a mall or a store, or when you sign up for, a service, a financial service online. All of these tend to define who you are over a period of time, and it changes over time, right? Typically in Africa, there's an offline scope because there's infrastructure like mobile money, which is digital, but not necessarily via the internet. And so what it means is that ID is still attributed to you, and the combination of both, online and offline attributes to your identity then come encompass what we want to define as, digital identity.
Yeah, that's interesting, that the behavioral part, and we'll talk about that more in a minute as well. I think a lot of fintechs are really grasping at this behavioral data to help complement their identity data, right? So, but it's a bit of a slippery slope from a privacy perspective. At what point would you like to see your behavior, kept to yourself versus used for your onboarding flows? So that's something we'll discuss in a minute here. But let's jump into why we continue to talk about digital ID, just beyond kind of maybe the confusion. What makes it somewhat controversial? Because it does feel like it's coming up sort of like fintech used to, or cryptocurrency used to. You have to talk about it all the time because there's some kind of, danger associated with it, or some high drama. So maybe we can hear from yourselves why you think that might be. Isabel, I'll start with you. What do you think all the debate is about?
Well, I think I think within the financial crime industry, I think we're all pretty much agreed that it's probably a useful tool. But I think controversy comes from maybe country contexts. So there are places like the UK where we just do not like the idea of an official identity document. You think back to the early 2000s, Tony Blair tries to introduce an ID card and the country throws up its arms and says, absolutely not. We see that as an infringement of our liberty, and it's not something that we want. I think that attitude has changed an awful lot definitely over the last year, but it was changing for a while before then. But then you have other countries who see it as, when they don't have an ID, they see that as an infringement of liberty. So for example, if you think of certain countries which face real security challenges, they want to know who is within their borders as a form of security. So I think a lot of the controversy comes from, well, what is your country view, to start off with, of where and how identity should be stored or presented, as how it should present itself. If you look at why do we talk about it as an industry, as I said, I think, broadly people would agree that it's a good thing. We know that how we identify people at the moment is inefficient, it's costly. We are incentivized because of sort of cost benefit analysis to harness technology for this task. But then you have to start asking yourself questions, again, in your country context. Well, I know I want to use this tool to improve a process, but I have to balance it, for example, with my GDPR or other data privacy norms. Do I have the legal or regulatory assurance or guidance that I can confidently use this technology in a way that I know I'm not going to get penalized for? And ultimately, can I trust this technology? Regardless if this is issued by a government or a private entity, do I trust it? And also, sort of, is it compatible with my compliance workflow or what I want to do? So I think as an industry, we agree it's a good idea. There's a lot of operational challenges. But of course, that's not to say there aren't countries around the world today that already happily use digital ID for compliance. It's just, I think it's where people are comfortable with it.
Yeah, and I think that's a great segue actually into some of the experiences that both Hafa and Paul have had practically. So Paul, I know you work with a number of larger banks that are working to improve their onboarding flows. Can you talk about the experiences they've had in this kind of digitization process and how they're thinking about digital ID? Is it kind of mirroring some of the thoughts that Isabella shared?
Yes, absolutely. And I'm happy that she got to mention country-specific context, right? Because especially here in emerging markets, in Africa and other emerging markets, being able to, access services and having a digital identity is not just a question of privacy. It's a matter of necessity, right? Now, if it becomes a matter of necessity, the way you view the importance of, access to your identity changes, because then you are thinking of that is my route to access the basic services. And privacy, I still care about privacy, but it wouldn't be the most important thing. So case in point, ADHA, right? Government rolls out, like crazy projects to identify billions of people and be able to give, aid to their people when they need it. And I think that really has, proven very important during COVID times, because now people are able to get relief. And so largely within emerging markets, the context is that ability to, protect your privacy is critical. However, we need to think of it from a perspective of necessity. Having said that, dealing with, financial services, then the new paradigm here in Africa becomes, we are mostly used to people, walking into our premises, accessing, our services, and all we need to do is to check whether they exist in the ID database. However, you need to understand that in Africa here, digital access to financial services has grown rapidly. There are more than 100 million people who own mobile money accounts, which in terms, basically is their first point of banking. What that means is that without access to that service, then they don't have any kind of banking. There are also that segment of people who have mobile money and also traditional bank accounts. And so you see these tiers of income levels who need different kinds of experiences in order to be able to access services. And what banks are trying to do a lot now is to be able to differentiate access to these services. And that's why they follow the tiered KYC process. So if you're following a tiered KYC process, it's just a simple process of, being able to identify whether your ID, exists in the database. If you're using a more sophisticated channel like a mobile web to access internet banking or traditional bank accounts, then it begins to look more like what we've seen, in Europe and rest of the Western world, where we begin to use infrastructure like ours approved to, do facial recognition, document analysis, etc. So that's typically been the approach.
So is there a risk in that kind of tiered onboarding that those without access to the digital ID system might be kind of excluded from certain products? Are you seeing that happen?
Yes. So there are people who just don't have IDs, right? And so then that becomes a challenge, right? How do you even begin to onboard them? How do you bring them into the system? And that is a challenge that it's not, well, private sector doesn't primarily see it as their headache, even though it's important to them, right? But it's government's responsibility to ensure that people in rural areas and remote areas get enrolled so that they can get access to services. However, it's always important to think about how we work collectively, private sector and government, and set up initiatives. So there are a lot of these kind of initiatives where, say, a bank is trying to onboard people in a very remote area and they all don't have IDs. The bank will work with, the authority for enrollment, let's say the National Identity Authority, to ensure that they reach that remote place and issue them the most basic IDs that they can get. So not long ago, Ghana has been in this whole process of enrolling its citizens, in a national ID program where it's covered over 15 million adult population and more to go. And this national ID unifies everyone's other ID, because the challenge for a very long time has been that there's always scattered ID documents. You could use your voter ID or your driver's license or health insurance ID to, access different services, just because there's no one unified document. So this is gradually changing. There's the World Bank ID for Development program that's funding a lot of these large-scale enrollment programs to ensure that as many citizens in Africa and many other emerging markets have IDs, and the fact that they can tie these into various digital channels, that would be relevant.
Absolutely. We're reaching halfway through our panel here. So if our attendees have any questions, please pop them into the Q&A and we'll get those answered at the end. I think some of the things you just shared there, Paul, around kind of the national ID unification, it raised a couple of interesting points. I think for me, I remember a couple of years ago trying to onboard a client who had an expired ID in Ghana and was told that it would not be replaced until a new ID system was rolled out. So they literally could not get a replacement, which meant they couldn't open a bank account in a foreign country because they did not hold a valid ID. But they were, between, quite literally a rock and a hard place there in terms of not having the appropriate identification from a global perspective, right? So, but Hafid, let's move to you and chat a little bit about what you're seeing in terms of open banking adoption. Again, it seems very poorly understood, I think, at this point as to how it can be used, but fill us in.
Yeah, in a way, open banking is a bit of a misnomer because it's not open in the sense of how data.gov.uk open data is, or how Sir Tim Berners-Lee's Open Data Institute is. Like, these are generally like public data, right? So and it's not really banking, because like my Amex card can be shared through open banking. Most people wouldn't think of that as their banking, but it is the term that we use for this consent-based exchange of financial data through common standards. And also it's not open in the sense that the companies that participate on this are regulated companies. So to provide the service in Europe, you need to be an account information service provider or payment initiation service provider, regulated by the same national competent authority that will oversee payments or banking. So it is I agree, it's a bit of a poorly understood name. The key thing and actually touching on a few of the other comments, the key thing around open banking adoption is both what we talked about, the necessity. So we see a lot of open banking being used to, for example, on credit thin file cases. So, if I'm an issuer and I'm unable to approve a card to someone, I now have the ability to refer Hafa to a new flow where they can, he or she can share their consent to share their financial data. And back on the point on inclusion, I think the financial trail or your financial information is as important as your digital identity. When I moved to this country 5 years ago, the reason I couldn't get a bank account wasn't that I didn't have an ID. I actually had one, and was that I had no financial history that I could programmatically exchange with the financial institution. Thankfully, things have improved since, but I know it is still the problem of financial inclusion is both a problem of identity as well as a problem of data mobility, portability and mobility in terms of the industry being able to receive that. And the other thing I think Isabella mentioned, I think is critical, is on trust. So very interestingly, where we see open banking like usage skyrocket in terms of like statistics, correlates very directly with countries with high trust. Right? And interesting, high trust countries are not necessarily wealthier countries, although there is some correlation. That's not such a strong correlation. And perhaps the best example is the Nordics. So in both in terms of identity as well as open banking specifically, and I would say digital identity. So Bank ID in Sweden is used by over 8 million people in a country that has 10 million people in population. So virtually every person who is eligible effectively uses it. And that has, of course, spread through the other countries in the Nordics. What we are seeing now, and we're very excited about, is the use of open banking as this microservice of both digital identity and financial information, wherever financial data is needed. So we're seeing more institutions implementing that on signing up flows. We're seeing, from a risk and compliance perspective, we're seeing more of its deployment around whenever people need to identify origination of funds, suitability. So of course, responsible lending, for example, is of course a big theme in finance right now. And perhaps the best way to do that at scale is asking the end users consent for sharing their financial information, so that you can generally have a full view of the person or business's finances. And that is all possible today through open banking. So the key thing here is we're looking forward to the continuous rollout of this service throughout Europe, and actually quite glad to see this reverberating other countries in the world. We're particularly, as a business, we're very focused on some of the largest institutions, financial institutions and fintechs, because these are both the institutions who have the trust today from these end users to grant consent to sharing this information, as well as the scale to really make this a successful proposition. So, from our work with the PayPal Group or the NatWest or STB Nordea, BNP Paribas, and so on, we're very excited to be, helping millions and tens of millions of people, hundreds of millions of people across this continent on, having more mobility of their digital identities and financial data through open banking.
Yeah, because there's absolutely some sort of critical mass required, right? If there's very few opting into open banking, then it becomes unreliable or not something that you're able to kind of build your controls on top of. So do you kind of anticipate a point where we get to that critical mass, or are we already there?
I think so. A lot of people across this year or recent past have said, oh, if you survey people, how willing are you to share your data? And then you get, but at the same time, if you survey people, how willing are you to share your card data through encryption, through near field communication? A lot of people will say no, but yet that's exactly what they do when they do, a contactless transaction. So there's a difference here between, and by the way, I actually think we need to invest in consumer education and digital education. Like, people should be understanding of this. It's not by obfuscation that will build trust. It's by building understanding that will build trust. But I think the future is not one where people say to a survey that they're willing to share the information. It's one where they simply do, where the experience of doing that is much better than the alternative, which I think is already the case. So if you're applying for a mortgage today, between printing tons of bank statements and mailing that over and waiting for weeks for that to be possible, which is the reality in a wealthy society. Imagine less so. You now have the option of doing a Face ID and sharing that information digitally in a way that is GDPR compliant, that you can revoke consent, that you have all your rights guaranteed. This is being provided by a regulated institution. So I am very excited, because I think we're now in a position where we have a solution that works at scale, and that we see some of the leading institutions in terms of financial or technology investment jump on this. But I think we're on the verge of seeing this be more broadly adopted.
Yeah, for our attendees, a lot of what Rafa's sharing, I think, again, like I said, is somewhat poorly understood today. There's a lot of uses for open banking for validation, like you shared, and verification. I think the verification part is the part of the puzzle that people haven't quite grasped, right? So it can be very much kind of relied on as a reliable, independent source of information, which is the terminology you frequently see in the money laundering regulations. So I'd urge people to take a look at open banking if you haven't kind of dug into it recently, and just see what's happening there. So we're going to go back to the FATF. Some of you may know that the FATF published guidelines on digital identity earlier this year, actually just as lockdowns were going into place worldwide. So JP, if you can just pull up the poll question for our attendees, which will hopefully, they'll just take a quick second to respond. In the meantime, Isabella, I'd love to hear your thoughts on what you think was driving this report and what you think the outcomes might be, especially those that are positive for us.
Sure. So yes, as you say, the report, the guidance document for digital identity and the use of customer due diligence was published in March, literally as Europe and the rest of the Western world went into extreme lockdown. And so I feel like do not feel bad if your answer to this is no, I wasn't aware of it, no problem. It's important when you sort of look at why now with this document. Obviously, it was an interesting coincidence with the pandemic, but of course, these guidance documents are years in development, and it was actually initiated under the US FATF presidency. So we're currently in the German presidency, previous to that, Chinese, and then previous to that, the American presidency. And some of you on the call who are in the digital currency space may remember this presidency well, mainly because it's sort of renowned for the sort of quite draconian action it took on virtual assets and virtual asset service providers. if one is a bit skeptical, so we see 45% of people weren't aware of it. Well, there you go. You've got your Christmas reading sorted out. And I would say actually it's quite a good read. It's easier than a lot of the other FATF guidance documents. But as I was saying, you know, with the US pushing digital ID, you could be quite skeptical and say, you know, that presidency was renowned for its negative action on virtual assets. Maybe they wanted to balance some of that negative attitude towards technology with really pushing this work on digital ID. But it really does tie into just a wider trend that we see in FATF of being just a lot more, not just accepting of new technology, but really realizing that without harnessing new technology, we are never going to make the effectiveness gains that are so important for FATF's overall success. And I think what we'll see after the strategic review and the 5th round of mutual evaluation reports, which will begin in 2024, is a real doubling down on the demand for effectiveness. And FATF realizes this can only be achieved through technology. And I'm not sure if in FFEcon agenda FATF already spoken or not, but you will know that the digital transformation of AML CFT is a key priority under the current German presidency. So sort of, you know, expect to see a lot more on all forms of technology and the FATF. Yes, they spoke on Monday. When you talk about some of the positive outcomes, obviously, I think, you know, it's not even been out for a year, and that year was full of a lot of distractions. So it's a bit too early to say whether or not, well, what some of the outcomes will be. I would say, you know, we typically see outcomes in forthcoming mutual evaluation reports. And one thing to note, which is quite important, especially when you're reading this, if you're reading it for the first time, is that what this digital ID guide does is, for the first time, it removes remote verification as always high risk by default, which is great. And you think, well, that's going to be really, really positive for financial inclusion, remote onboarding or delayed onboarding. But it's really key to remember that the wording in the interpretive notes in the actual standard document have not been updated. And so there is an imbalance between what this digital ID guidance, which is not legally binding, and the standards say. So until that imbalance has been corrected, and I'm sure it will be soon enough, I fear that maybe this guidance won't be adopted with the same sort of gusto as it could be. But what I would say is it provides really useful definitions and examples of where FATF seems to be happy with the use of digital ID. And so I think it should be commended as a real positive development from the group.
Yeah, that's an excellent point there on the non-face-to-face onboarding coming out of that report, as you know, apparently, you know, maybe equal risk or even lower risk than face-to-face onboarding, right? But you're right, it's not trickling down into national risk assessments and things of the sort yet. So although everyone on the call should be aware of that change, you know, you'll really have to think carefully about how to incorporate that into your own risk assessments. So, so let's jump forward into just some concepts around how this is affecting consumers, right? So we're talking a lot about efficiencies and, of course, maybe kind of improvements to effectiveness of our financial crimes controls, but that's, you know, kind of a business-driven or capitalist-driven approach. And I think Paul shared some ideas earlier about, you know, sometimes the necessity of identification kind of outweighs any privacy concerns a person may have, which is an unfortunate outcome, really, you know, that may be the case. But Haffa, I'll turn to you. Can you share maybe some thoughts on a personal approach and what consumers have to gain from digital identity?
Yeah. And I think this is back to the discussion on education. I think this is a really key area to educate people, is that in the absence of information, what one has is left with is risk aversion. So back on the point of not being able to open the bank account, is that in the lack of data mobility, I'm prevented from accessing a financial service. And this can be the same, this can be true for many other services, right, throughout and back to Isabella's earlier comment on this year, this was a key problem this year. Like in the UK, we had a big problem in the first iteration of the SME rescue loan scheme was the inability for SMEs to get onboarded as a client in commercial banks. And that was, you know, a product of a chain of or say a technical debt in their own digital journeys. So the key point here for people to understand is that this data mobility fosters inclusion. This actually fosters agency, both because everything is exchanged based on your consent. Like that, literally, there cannot be any exchange of data without your consent. It's the very first step on this process. But it also fosters agency because with the exchange of data, you now have these propositions that can help people generally understand, people and businesses generally understand financial services. Like this is a really key thing, and part of the reason why we think this is a spark of a new age in financial services is, financial services tend to be conceptually simple, but operationally complex. Like I think everyone understands the idea of a mortgage, but the actual mechanics of getting a mortgage or remortgaging is very, very complex. Same thing for pensions. If you think of index fund investment, like there's a lot of things that need to happen on the background for this simple financial product to actually occur. And this is the combination that we think can be quite powerful, which is giving people the understanding that they can share their financial data, enabling businesses to receive that data and treat it programmatically. So this generally scales, and this is not a sprawling back office somewhere. And ultimately reverting this back with more optionality. So this actually foster competition, foster understanding to people, so they can have better agency over their finances. That's the hypothesis that we have. And the good thing is that over the last 8 years, we've seen, especially since in the last 2 years, since we've seen the enforcement of the open banking mandate across Europe, we're seeing that hypothesis being confirmed. And I think the last thing that we're seeing here, and what we're calling as open finance, is this move towards more financial data and more financial products. So the same thing can be applied in mortgages. And effectively, we already do this in the Nordics. This can be applied to public services. And we facilitate public payments over open banking in places like Italy or the Nordics again. So, and actually HMRC is running a tender on open banking at this moment. So this is coming. And I think the key point here for people to understand is, unlike the world of data before GDPR, where it was hard to argue how the people could understand or the data was used and how it was used in their agency over that use. This wave of financial data exchange is solely based on consent. So I think it is again, the better we are at spreading that information, the more the bigger base of understanding that we create. I think the better this will be for society, and the more personal these financial products will become. So I think there's a really positive virtuous cycle here that we can have.
Yeah, and as you're talking, you're mentioning kind of this education element, which I think actually can be flipped back to business as well. We see several different industries that are very nascent, I think, in their financial crimes controls, or maybe have had the opportunity for quite a few years to catch up, but just frankly haven't, such as I hope there are not too many lawyers on the call, but law firms, for example, really don't go to great efforts in the AML space typically. So this seems like an area where they can maybe lean in and be gathering information as well and learning. So I think we'll jump forward just to chat about what we feel like our identities should include from a digital perspective. So Paul, you already mentioned this idea of your kind of behavioral digital footprint. Maybe detail for us what you think that behavior might include that you would be comfortable with. And JP, we can raise our next poll question as well, which touches on this.
Okay, great. Yeah, so here in Africa, unlike Europe and in the largely Western markets where people have bank accounts and they would use their bank account as their means of transactions, we do have a bit of a different system. And that's what we call mobile money. Mobile money doesn't necessarily work on an internet rails. It works on a rails called USSD. And in essence, it means you have this wallet you're able to access without having to be connected to the internet. What it means is that for most people who have various reasons why they wouldn't open a bank account, for them to access any kind of financial services, they would start with a mobile money account. And this is becoming common across countries like Ghana, Kenya, Uganda, which are like the leaders when it comes to doing mobile money transaction. So that is one channel or league for non-behavioral financial data. Then when it comes to having really high-scale activities, what I mean by high-scale activities is that if you're running a business, your mobile money account can't necessarily, unless you're a very small business, but your mobile money activities can't handle all of your transactions because of the KYC limits and the merchant account limits. And so then people open bank accounts, right? And they do have another channel of transactions over there. And so you have a situation where you have all of your financial transactions split. And now we need to find a way of unifying both offline and online channels of your transaction. And that's what we do over here, right? By understanding that this specific behavior, we're able to first connect government identity, sources of government identity data to this non-behavioral data across financial accounts and data, which is both the bank and mobile money accounts. And that creates a very holistic picture. You need to understand that in Africa here, people are very price sensitive. And so open banking is even more important to Africans than the rest of the world, just because it gives that level of understanding of granular transactional behavior, where people sort of like would spend less than 10 cents on something very as important to them as, say, their meal during the day. And usually in the larger banking system, those kind of transactions are ignored, right? And so we have a really big opportunity here in Africa to access data at a granular level, to be able to provide financial services and various innovations to the regular people or the ordinary person at a very detailed level by understanding their financial transactions, behavior, at that granular level, and it helps them to, it's an opportunity for financial services to use this as a platform to, for example, personalize financial products that they, deliver to their clients, or move into the unsecured credit lending space, which, is a really important, space where people need loans as little as $5, a day just to get by. So this is what we've been doing here in Africa. And obviously, we are not so strange. Most African regulators, particularly, are not so alienated from the concept of open banking. The reason why I say this is that for a very long time, the concept of interoperability between mobile money networks as well as telco networks has existed. So in Ghana, about 3, 4, 5 years ago, they implemented what we call the mobile number portability system, which really means that if you belong to, say, a telco network, MTN, for example, and you wanted to switch your phone number to another network like Tigo, just because you're not satisfied with the services MTN was giving you, you have the ability to switch, and you do that based on your consent, And so that system already exists. That concept of being able to share data and move across, various ecosystems exists. And that is really the understanding for which we are sort of like leveraging and educating regulators as well as, consumers in order to make them comfortable to be able to share their data, etc.
Yeah, I love that reference to kind of personal choice, the ability to switch providers easily. We find that that's often not the case, as I mentioned earlier, unable to close a bank account. So, so just the results here, it looks like we are not that thrilled with biometrics, and I'm not that surprised. So let's see, I think maybe, Isabella, I might turn to you and ask whether, some of these kind of, I guess you might say, kind of fear factor driven approaches to personal identity being used, or data points being used in a digital context. How much of that do you think is again kind of fear mongering versus truth? How much do we really need to be concerned about, do you think?
Yeah, no. Before I do that, I would just like to pick up on points that have been running throughout with from Rafa and Paul, and really on education. I think this is such an important point. And I think when you ask yourself, like, what do you feel comfortable being included in an ID? So if we said to this crowd, you know, you're not comfortable with your biometrics being shared, this is what you could gain if your biometrics were included. And I think that's often something we see, you know, you're asking for this information, but I don't know why you need it. I'm so much in my work, I come across, I speak to people all over the world, and I hear the same story that, and I'm sure you've all heard it as compliance professionals, people do not understand why certain documentation is required for opening certain types of accounts. This causes friction in the onboarding process, and you end up having customer churn. I think we all need to do better at educating people on why bits of documentation are required for AML CFT checks. But to the sort of more general point of digital identity, we'll, you know, find out what people are happy to give, explain to them, you know, if you select those things, well, this is what we can offer you via digital ID, but if you give us these other things, that would also be useful for X, Y, and Z. I think ultimately it's tricky when, you know, we're talking about things which is sort of at the theoretical level, to your point about fear factors and sort of conspiracies. I sort of think it ends up being, you know, when it's in front of you, do you choose to subscribe to it? And, you know, after some research, do you find if those myths or scaremongering are true or not? But I'd also say, you know, with a lot, I think one of the interesting reasons why no one selected what the other 3 points on that poll didn't do very well is because we already give all that information as part of onboarding. Biometrics is the only one we don't give in the UK. You know, as Paul knows, in Africa, you absolutely do. I do research in Tanzania, and to open a mobile money account, you have your government issued digital ID, which has to be biometrically verified at point of use. The same in Pakistan, to an extent also in Indonesia. So there's lots of examples where biometrics are a really key final step in the digital identity chain. But I would always say to people when considering what they're willing to share, sort of ask yourself, you know, how much do you share already? Not really thinking about it. You all have a digital, I assume maybe 90% of people on this call have some form of social media presence. How much of a version of a digital idea of yourself have you already given away? And you know, those companies do with that data what they will. If you willingly enter into a contract with someone and there are checks and balances in place to protect the data and the data points that you choose to give to it, whether that be your name or a full-blown medical history, I think you have to look at how well those points are protected.
Yeah, that's a perfect segue into our wrap up here. So thank you to those that have submitted a response to the form that we shared. So what I'm going to ask each of you panelists now is to think about 3 words that describe your own digital identity. And we'll get back to you in just a second there while you're thinking about the 3 words. In the meantime, JP, if you could pull up our final slide there, and I'll just kind of talk you through a quick anecdote around personal data, essentially. So we're sharing with you here a similar type of survey to the one that we just shared in the form, which was essentially just asking you to describe your digital identity in 3 words. You can see here you're asked, you know, if you were to select one item that you would like to have with you on a desert island, what would it be? And I'm showing you this just as a quick kind of reference to exactly what Isabel is sharing. You're probably sharing things that don't even realize and the repercussions of them. So that's actually my dad there on the far right. This is from a very local, tiny newspaper many years ago, but I thought it was quite funny at the time, not least because they're already on a very small, relatively deserted island. So the question in the first place was quite comical to me, for those of you that aren't familiar with Kauai. So I tagged it on Facebook. This was a whole 8 years ago when I still used social media, and it's become part of my dad's digital narrative, right? And it's kind of an entirely inaccurate view in reality of my father, actually. So you can see here they've been asked to select one item, but he selected 2, beer and cake. So he's obviously not good at following rules. You could kind of learn from this. One of them is beer. My dad actually doesn't drink, and both are terribly impractical items, right? So if you're really truly stuck on a deserted island, you wouldn't really want to have just beer and cake. You can see the other 3 adults there actually chose water, and the child in the group chose ice cream. So more along the lines of my father. You're kind of learning this narrative about my father, which really doesn't hold true as to his true identity. And of course, a very lighthearted example of the stories that our digital identities can accidentally or sometimes maybe more purposefully tell. But we'll circle back to our panelists and take down that slide. So we'll start with Hafa. What would your 3 words be?
And I actually, as you were showing that, I was trying to visualize my own, say, digital track or what can be traced to me. And I think one is Brazilian, because that's my nationality, and I think you can probably find a lot of things on the internet that relates to that. Second one is say economist. This is largely my profession, and also, from publishing things, I think that would be something that one could find, or that's part of my digital identity, I guess. And I'll say the third one, kind of related to the first one, but I'll say football fan. I'm a very big football fan, and it's probably more than I would like. There's probably a lot that I've posted on football. In kind of like your father example, I guess. But yeah.
Those are great. And Isabella, we'll go to you.
So I looked at it in a bit of a different way. I would say that sort of like in terms of timescale. So I would say currently, I feel like my digital identity is quite clunky. And my experience of digital ID is clunky. And then I would say developing, because I think my use of and knowledge and everything to do with digital ID is developing. And then sort of would finish on my hope, which would be, I would like to think that one day I'll have a really agile digital ID. It's really useful and great, and it solves all my problems, and all friction is removed from interaction with most things. And I can take it with me, and it's a happy, agile part of my life.
A lovely thought. We can all hope. So, and Paul, we'll end with you.
Well, anyone who sees my digital ID or follows it, 3 things will be clear. 1 is food, 2, travel, and 3, probably yes, safety. And I say safety in the sense that basically that is what I always want to project, really. And so yeah, this is what my digital identity sort of like communicates.
That's perfect. And mine actually, one of mine was hungry, because if you look at how often I am making a purchase at a grocery store, it's quite obscene. So, right. So my others are boring and cross-border, because you probably would be confused ultimately as to where I am. But we're seeing responses come in from our community and our attendees here today, so both the FFE as well. So we see compromised, very visible. Let's see what else we have. Greek, insecure. Now I'll assume when I see the word insecure, we mean not as a personality trait, hopefully, but as a security perspective. Complex, guarded. Let's see, we see owned by GAFAM, which is Google, Apple, what is it? Facebook, Amazon, Microsoft. Yeah. Yeah. We see everywhere, vulnerable, social. Let's see, we see hairy and hungry. So again, this is a little bit of a anthropomorphization of our digital selves. Accurate, updatable, convenient. So there's kind of, you're seeing a range of responses, some sort of kind of broadly focused on personality traits and what you're seeing kind of come out about your personality online. Accuracy and agency over your identity, which I think Hafa already talked about quite a bit, and security, which is no big surprise, but both in positives and negatives, right? So both sides of that coin. So, not really any surprises there, I don't think, after the conversation we've just had, but thank you to those that have responded, and please do continue to bring in the responses, because they are lots of fun for us. We're going to wrap up with our questions and answers session now. So if you have a question, please do send it in. But we'll start with the first that I've seen come in around open banking, which is this idea of if it is potentially increasing account takeover risk. So essentially, once you have access to one account, you have the whole string of accounts. Hafa, we'll start with you.
So interestingly, I would argue that open banking reduces the by the way, takeover risk is a huge problem, right? So just to start by saying that it's a lot of fintechs today have solid processes around onboarding, but then if one of their users has a Gmail account that's hacked, which is not too hard to happen, like then they can have a compromise. And for example, in the payments industry, you have a lot of like someone will log into a online merchant acquirer account and change the bank account, right? So to receive payouts. The reason why open banking is a solution for that is because if the fintech or financial institution replaces the ability to just simply change the bank credentials, which is actually a quite critical piece of information, right? For the whole, if you think about this as a systemic perspective, like this is a really important abstraction on the system, changes that with a verification service, meaning if I'm Hafa and I'm trying to change a bank account just because I have two and I want to use the other one. If I'm asked to share rather than me just inputting a bank account and sort code number and the service trusting that I'm doing the right thing, if I was presented with saying, okay, do you consent to sharing your information through open banking, and I can do a Face ID on my phone, that's not only easier for me to do, is actually a way for the service to receive that piece of data directly from the FCA supervised financial institution through a regulated service like Tinks. I guess the argument there is like, oh, but what if the account that one bank account gets hacked? The key thing there is that it is not you will not be able to consent on things through open banking by, say, having access to a bank account, because most of the time, the consent that is required in open banking is through a mobile app. The person has to have access to that mobile phone and then to whichever authentication method that financial institution is using. So that could be, a dynamic password. That could be, your Face ID, for example. So, and by the way, there is no connection between the services. So even if someone were to, for example, hack my pick your bank institution account, there is nothing in relation to how I access that service to how I access every other service in my financial life. So there is no contamination, let's say, here. So it's actually a really good question, but I would argue this is a very strong endorsement for open banking, actually.
That makes sense, absolutely. And then we saw a question come in around crypto adoption in Africa, in the African continent, Paul, and how digital identity may be playing into those products. Do you see much of that in the work that you're doing?
Yes, in fact, at Approve, we work with a lot of crypto players who are using that as a means of, bypassing the regulatory, challenges. And so we have a lot of crypto players that are enabling moving money across, Africa. There are about 54, African countries, and they're using a lot of that infrastructure to enable moving money between borders. Now, the challenge really is always around crypto being a fairly new thing to most governments. And so most governments in Africa don't have regulation around it. So I would dare say that crypto companies largely implement really strong KYC solutions just because they do want to prove that they can be compliant. It's also another technology rails that can be used to solve really pertinent problems in our economies. And so we've seen a lot of our customers really implementing, KYC in such a way that, they are quite compliant and better. Actually, some of them getting better at doing it than, traditional financial services.
Absolutely, and that's what we've seen in Europe as well, and other regions as well. So just touching on Europe quickly, Isabella, we saw a question around the adoption of digital ID in Europe across banks. I'd say it's been quite mixed, and Hafa mentioned earlier that the Nordic countries are all over it. We know that to be true, but any other comments you'd add there about adoption in Europe?
No, I mean, other than I think pretty much all EU member states have some form of, they have some form of ID card other than, one obviously being the UK. But on the topic of the UK, for the last few days that we are still in Europe, so we fits under the permit of your question. I would say that the UK is actually doing some really interesting work at the moment on digital identity, which follows a consultation that was out last year and the evidence of which was returned in September. And the Department of Digital Culture, Media and Sport is really spearheading the work that the UK is doing on digital ID. It's quite collaborative with a lot of private sector actors. So I would expect in 2021 that we'll see a lot more movement in the UK on this topic, which should be really exciting, I think. And just your point actually earlier about people like estate agents being really slow on this, completely agree with you. But weirdly, HM Land Registry is coming up with all this guidance at the moment on digital ID standards to help approve conveyances. So, you know, bit niche, but might be worth looking at if that's of interest to people.
Yeah, we see entire regtex focus on that area right now. It's very hot. And I think, you know, to all of your comments, it's been a tricky time for online purchases. You're seeing adoption of these things quite quickly, especially in conveyance. So I think just one last question, and it's going to be a quick one, Hoffa. We got 2 minutes, let's say. Talk about encryption just very quickly. Do you think that we should be encrypting more of our personal data, just like we do card information?
Oh, that's a really interesting question. The key problem with encryption is that regulation around data and data mobility tends to be technology neutral, and encryption by definition is a type of technology. So you need to, and receiving and remitting end needs to comply with a set of technology standards. So those two things are hard to mix together. So a lot of our data is actually encrypted. If you think like from an engineering perspective, it is actually held in an encrypted form. And in transition is typically encrypted, right? But that is largely in private, I would argue, private schemes, right? If you think about most of how data mobility happens today, that is encrypted through, you know, a scheme that is owned by a private organization. I would say I look forward to us doing more public-private partnerships in that encrypt and especially that is consent-based and exchanging data. Open banking is actually owned by society. Like the open banking implementation entity is a custodian of open banking standards in the UK, for example, and the same is true for every member state in the EU. So is it technically like the standards are actually owned by us. So I think that is a great example of how, yes, encryption is one solution, but like as we look into information security, and you know, in the private sector continues to have a sprawling set of encryption technologies and on your smartphone and other smart devices, let's say, I am particularly interested in the world where we have these societal goods that have information security around them, encryption being one of them. But you know, it is not necessarily owned by a corporation. It's actually like, you know, part of society, really.
That is a perfect place to end on the note of public-private partnerships, where we always like to bring these conversations back to. So thank you to all three of you. We'll leave it there for now, but a huge thanks to our panelists. And JP, I'll hand it over to you to close today.
Wonderful. Thank you, Kate. And a big thank you to Paul, Isabella, and Rafa for sharing all your practical experiences today, and of course, all the time in preparing for this session. Hopefully you found today's session valuable, and we thank you again for joining us and hope to see you in the next session or later this week. If not, I wish everyone a very Merry Christmas.